Dear students, we are still in accounting equation. So basically in this class we are going to learn about outstanding expenses, prepaid expenses, accrued income and income received in advance. And I'm going to teach you how this is treated in accounting equation. So let me start with outstanding expenses. Now, number one, we'll just see outstanding expenses. What is outstanding expenses? Expenses which are due or unpaid, that is outstanding expenses. For an example, this month you did not pay rent. Now your rent has become due, no? So it is outstanding rent. For an example, in the business, you don't pay staff salary and then it becomes due. So that is your outstanding salary. So whenever it is outstanding salary, that is liability, that is liabilities. So in accounting equation, whenever you see rent due, salary due, commission due, it always gives rise to liability. So in accounting equation, the liability increases. Why it is liability? You need to pay later. It is due. It is amount payable. No, that's why it is liability. And in accounting equation, liability increases. And from where you will pay money? From the capital you have in the business, no? So the capital you have in the business is known as owner's equity. So whenever you pay amount due from the owner's equity, your owner's equity will decrease. Owner's equity will decrease. So I'll repeat, outstanding expenses are those expenses which are unpaid or due. So whenever you don't pay expenses, it becomes liabilities because you have to pay it later when you have money, no? So it gives rise in liabilities. At the same time, owner's equity, it decreases. Now the second one, we'll just talk about the prepaid expenses. So now what is prepaid expenses? Prepaid expenses are those expenses which are paid in advance. For an example, this month you pay rent for another month. Let's say you are paying rent for 3 months this month. So it means you have paid rent for 3 months. So you already paid rent in advance. That is your prepaid expenses. So whenever you see the sentence like rent paid in advance, salary paid in advance, wages paid in advance, these are your prepaid expenses. Prepaid expenses is asset. So your asset will increase. You are paying in the form of cash. Cash decreases when you pay expenses in advance. So the first one, prepaid expenses, is asset. Asset increases in accounting equation, and it also tells you that you pay that expenses out of your cash. So cash decreases. So this is brief about outstanding expenses and prepaid expenses. Now we'll move to accrued income and income received in advance. Now what is accrued income? So here accrued income is income which has been earned but not yet received. You know that for sure you have earned that income but not yet received. Sometimes bank will not give interest on time, no, but you know that when you keep money in the bank you will get interest. So such income are known as accrued income. So accrued income is your asset. When you get accrued income, your asset increases. At the same time, whenever money comes in, your owner's equity, your capital will also increase. For an example, you keep money in the bank. No? Let's say you kept money 5,000 in the bank. So after 3 months, you will get 5,000 plus some amount, no? So your asset increases. Now with the principal amount, you have got interest also. So owner's equity also, it increases. Now number two, we'll talk about the income received in advance. So that is the income that you received in advance. For an example, salary received for 3 months. So you are getting salary for 3 months. In such cases, your asset will increase, but in such cases,